What I think is important to say at this time is that food prices in particular are elevated, and we all know why. It's part of the general expected rise in inflation as the macroeconomic measures, as the reform measures, the corrective measures to put the economy on a straight path take effect. But I think the important thing to point out at this time is that the focus of Mr. President is on keeping his promise, particularly to the poor and the vulnerable. Food prices are elevated. The purchasing power is limited. And that is what Mr. President is speaking directly to through the intervention program of direct payments of 75,000 naira each over 3 months. That is 25,000 naira a month to 15 million households. And each household is about 5 people. So that effectively providing funding for 75 million people. That all-important program has been revamped to make sure that it is robust and to make sure that each beneficiary has a NIN number and a BVN number or access to mobile money accounts so that we are sure that the right people are paid and that the system is fraud-free. In addition, and this is really in addition to the other intervention to put food on people's tables, to make access to food affordable for the average Nigerian. And that is the intervention to provide grains for food and even for feed meals. All in an effort to increase the availability of food in the markets. And of course, as we have heard, earlier there was a release from the strategic grains. More recently, there was a 42,000 metric ton release from the strategic reserves, and with another 60,000 metric tons to come. This is all in a bid to make sure there's food in the marketplace, but more importantly, the emphasis now is on making sure food, the purchasing power to buy the foods is in the hands of the poor and the vulnerable in a society in particular. So, given that, at a time of the kind of cost of living spike that we are seeing, the most direct way is to give people money, allow them to go to the market and buy. So in addition to the direct payments system that has been revamped, will now be immediately implemented, there is also an attempt to give artisans, traders, women, youth, nano businesses, as we will call them, to give them all a grant, a non-repayable grant of 50,000 naira under the same intervention program scheme of Mr. President. And in this particular case, there will be digital verification, just like with the direct payments, direct transfer procedure. And in this particular case, it will cover at least 1,000 people in all 774 local governments. And so that program will now be another 50 billion. And the important thing is to note that to the extent that this is the most direct way to help people at this time, it can be expanded, it can be continued until we find a more stable environment in terms of food production, food prices, and affordability through increased spending power of the poor people. That is the situation at the moment. That is the effect. That is the concentration. And it is a commitment of this government to ensure that the poor and the vulnerable are taken care of at this particular time of elevated prices. Now, when we want to look at the background to this, it is as a result of 8 years of a build-up of money supply, a build-up of liquidity in the system, a build-up of money which was not matched with increased production. As therefore you have excess demand, excess supply of money, and you don't have the goods on the other hand to match it. That is what the macroeconomic measures, that is what the reform measures are correcting. And they are well on the way to doing that. In terms of the government's finances, they have been totally revamped and repaired. And it is not just the fact that there has been the removal of the petroleum subsidy, which was costing 400 billion naira every month to the government at its height. In addition to that, there has been an effort to ensure that the people's money is not in the hands of a few. And on that point, I must emphasize that when we talk about the fact that the last 8 years before Mr. President came to power on the 29th of May, 2023, there was this liquidity build-up. The issue was that the benefits or the funds were going to a few. Only about 5% of the population have bank accounts that have more than 500,000 in them. So the majority were left out for 8 years. They were on the sidelines, while a small minority enjoyed. That is the major correction being made by Mr. President now. That is the major macroeconomic reform that has been put in place. So therefore, government revenue that was outside the federal government's consolidated revenue fund, that was outside the POS, has been diligently identified, and it is being collected back, being taken from the various pockets it was in, and being brought into the federal system. And going forward, the federal government-owned enterprises have a much stricter regime of cost management, because the government is, through technology, taking its revenue immediately it is earned, rather than waiting for a government enterprise to now remit and comply with the rules. Rules are being enforced from the start by taking what is due to government as soon as that revenue is paid. And this is the way in which the finances of the government have been repaired. And of course, on the expenditure side, a totally new system of expenditure management has been authorized and approved by Mr. President and is being implemented. Once again, using the power of technology and digitalization. And what that means is that payments to suppliers, contractors, beneficiaries will go directly from the federal treasury straight to the beneficiaries, without having different places where it is where it was placed and then redistributed. No, it is going to go straight, just as with the direct payments to the poor. Those will go straight to the beneficiaries using technology without any intermediary in the middle. In terms of inflation, we have looked at the reason why undue build-up of money in the system not matched by supply, productivity, production. In order to reverse and improve and eradicate that inflationary effect on the economy and the system as a whole, the reforms that have been put in place do include the fact that there needs to be a removal of that overhang in the system. And therefore, in addition to a robust revenue system, we're starting from ensuring that oil revenue goes up. Production and sales have gone up from 1.25 million barrels a day when the president assumed office to around 1.65 today, and the intent is to ensure that oil sales remain at that level. Oil production and sales remain at that elevated level, and indeed are increased because it's still below the OPEC quota. As a minimum, the target and the efforts of all stakeholders, including the security services, is to at least get to the OPEC quota, which is what the nation is allowed by way of oil production and oil sales. So that is the oil revenue side. On the non-oil revenue side, that is the taxation. There is a commitment to have a 70% increase this very year in the amount of tax revenue collected, not by increasing taxes, but by rationalization, by improvement, by applying technology. We do have a fiscal policy and tax reform committee which is rounding up its work and about to roll out new measures which make taxation less burdensome, even administratively less burdensome, reduce the number of taxes, do away with frivolous levies and fees that do not in fact yield much but cause much by way of nuisance value and administrative inconvenience to the population, particularly businessmen. But at the end of the day, the ways and means needs to be brought down by specific actions, and those are being taken in the financial markets. Funds are being garnered, revenue is being raised with a particular intent to pay down the ways and means and have the government's accounts in balance. The government's day-to-day accounts, where it spends from and takes in revenue, to have that imbalance. That's a commitment of the administration, and the strategy and the path to achieving that in the nearest future has been well laid out. In addition, there is need for collaboration, and there is collaboration between the monetary and the fiscal side. As we know, central bank is in charge of the exchange rate, in charge of interest rates, money supply, and so forth. And in terms of exchange rate, it is doing everything it can to bring improvement to that situation. But the fiscal side, the government side, has a role to play in that. And that is why taking a cue and collaborating and cooperating with what the monetary authorities were doing, interest rates have been raised. So the rate at which the government sells its treasury bills and bonds has gone up in order to help attract foreign investors, foreign portfolio investors, foreigners who are willing to hold the naira and invest in the Nigerian economy by buying government securities. That is a sign of the type of collaboration and the type of cooperation that will help the economy as a whole, with the fiscal and the monetary side working together.